Righty, so this is going to be, this could end horrendously, so I'm really hoping the assets behind this are going to work. It's been several years since we've done Play Your Charts Right properly. Hands up who doesn't know how to trade. Okay, there's a few. It's going to be interesting to see how well the non-traders do in this, because just like Play Your Charts Right, it's simply up or down. So we're going to see what your beginner's intuition is like. So in order to play this, you need to get out your mobile phone and then go to therealistictrader.com/PYCR, as in Play Your Charts Right. So if you can all go to there, and that should lead you to a Google form. Don't worry, I'm doing 0 data capture, because I've already got your data. So, no. It will ask for your name, though, and that's just so we can identify the winners and losers. The purpose of this little exercise is obviously for shits and giggles. I do nothing in life if it isn't for fun. But also, it's going to be a lovely training exercise / training or learning consolidation. There are no secret questions or sneak questions, if that were. So if anyone here has done the RT course and you've done it all diligently, you should get 100%. You should. But I'm pretty sure not everyone has looked at everything. And yeah, it's going to be interesting. Are we there yet? Leave no person behind. No. Right, Steve, you are to play as well. Okay, we all there? Yes? Who's not? Come on. therealistictrader.com/PYCR. Should have taken like 20 seconds max. Oh, sorry. Okay, let's crack on. So, here are the rules. The rules are, I am the ultimate judge in the results, but I will show you a chart like this. And this, obviously the number corresponds to the question we're on, so you simply have to choose up or down. And that is it. So, what do we got here? Number 1, press up or down. Yeah, let's have some nice background music, that's good. Winner's music. Are we ready for the next question? Yep, question number 2. I will go through all of the explanations at the end. Okay, I almost forgot what was going on there. Question number 3, up or down? Number 4. Number 5. Now, by the way, I do understand that this is suboptimal because in reality, you'd be doing a top-down approach, looking at the weekly chart, daily chart, and then etc. And obviously, you'd have some fundamentals behind it. So I know I'm forcing you on the spot here, but it's still going to be a good learning exercise. Number 5. Question number 6. Number 7. I did this earlier myself, I got 100%. Yeah. No, just the overall move down. So roughly, in 20 candlesticks time. Oh, shit. Whoops. Yeah, definitely not next candle. But as in, what's going to happen? Sorry about that. Oh, does it enable you to go back and change previous answers? Okay, I'm going to go quickly back. Okay, very quickly. So if you want to revise your answers. So yeah, the question is up or down, but roughly over the next sort of 20 candlesticks, basically. 2, 3, 4, 5, and 6. And I think that's where we were. Right, question number 7. Oh no, that's probably where we were. Next question. Number 9. Question number 10. To be honest, these should be really easy questions. I'm expecting high answers, high results. Question number 11. Yeah. Number 12. Number 13. Number 14. Number 15. Yeah, there's a theme in the last couple of questions. Number 16. Textbook. Number 17. That's the hardest question of the whole game, this one. I feel almost bad putting that in there, but there is a reason why I put it in there. Number 18. Number 19. And number 20, which was the last one, and then I added one last minute. So it's a quiz of 21 questions, nice and logical. And I figured Bitcoin has 2.1 quadrillion Satoshis, so 21 million coins. I figured this may as well have 21 questions. So last but not least, 21. My bank balance. Okie dokie, let's do some learning. Right, answer time. Oh yes, press submit, no cheating. Yeah, everyone press submit. And actually, we're going to quickly see how many results have come through. Oh, that's my family. That shouldn't be there. Oh well. So Google Forms. Here we go. Sign in. Responses. Okay, good, right. 139 responses. Yes, we have data. And I will share the data in a bit. We'll go through this at the end. But I love a good data fest. Right. Okay, right. If we could have hush in the room, please, that would be grand. So question number 1. So obviously, the experienced people here would see this mass. Oh, by the way, every single chart here is on the 4-hour chart and with Bitcoin. I standardized the whole thing. Question 21 is the only non-Bitcoin one, and you'll see why. So, looking at this, you're thinking, ooh, big overextended candle. There should be some sort of pullback, at least a 50% pullback, which is, nature. Nature is calling for that. However, what's happening here in the last sort of candle here? High test. Now, what does a high test signify? What's the underlying reason for a high test? Rejection. Yes, it's rejection. So what's happening is that all of a sudden there's lots of buying activity, and to the point where it hits a certain level, and the market goes, whoa, no, way too overvalued at this level, get back down. The market then forces it back down, it closes the candle with a bit of a big wick, small body towards the bottom, and you nearly always see a continuation. And so if you press down in your answer, congrats. So, and yeah. Now, some of you are also thinking this is a symmetrical compression, going, oh, it's non-directional, which is true. Symmetrical compressions where it is non-directional. However, you always have to look at them in the context of where it is. It's right in the middle of a mass falling, plus we had that rejection. So, yeah. Next question. Number 2. This is a standard double bottom. Pretty. It doesn't look easy. Now, again, trading is all about maintaining 2 opposing beliefs in your mind at the same time, and it's a seesaw. You should never be like completely, one-sided. It should be like, oh, I can argue equally both sides, but I'm slightly leaning to one. So the opposite answer to this is I would be drawing a big support resistance line down here, going, oh, actually, overextended move into resistance, let's sell it. But at the same time, this is also a double bottom, which has a previous level of support over here, and therefore, I should have actually, in hindsight, removed this question, because the answer is actually up, but I know it does continue to drift down. So that is my bad there, sorry. So I'll be even more impressed if you get 100%. Number 3, sorry, can't count. To me, this is just a topping pattern and a shitty head and shoulders. Shoulder, head, shoulder, neckline, and the neckline is actually all of this support level down here should have further falling. And typically with the head and shoulders, neckline to the head should follow through to the downside. So if that was like $10 from neckline to head, should fall down $10 from neckline down here. In fact, looking at this, I'd say there is a level of support across this line. And then, yeah, you would have got it. So once we hit this level, that is the head and shoulders complete. And then whatever happens next is completely whatever. And actually, we see a Kobo. So for those that don't know what a Kobo is, it's my term for kiss off, bugger off. So markets will always pull back to key levels. So here, there's a big support level. Market shat its way down here, pulled back to kiss off previous support, and then buggered off. Kobo, kiss off, bugger off. So yeah, that was a nice one. Whoopsie. Number 4. This is a hard one, actually. So we have, the first thing I would have done, drawn a big support level. And it's Koboing. Whoever said Kobo? Broke support, pulled back to kiss it off, buggered off, and in doing so, that Kobo acted as the right-hand shoulder of a dodgy-looking head and shoulders. Number 5, we had a very similar one, same sort of chisel, double bottom. That's, I think, one of the easier ones there. And it's overextended to the downside, so the fact that you have this double bottom here is that, yeah, pretty. That would be a high conviction trade for me. Number 6. Yeah, so I was checking myself before I wreck myself here. So I would be drawing some lines. Some lines I draw is this support level over here, but also this resistance here. So it looks like a really shitty compression, but overextended move straight into a topping pattern. In this case, looks like a dodgy triple top. Neckline, the distance from neckline to this, let's say whatever that is, it should fall down to at least this level. Ooh, looks like, nah. Yeah, should fall down to here. There we go, almost spot on. And then guess what happens here? Double bottom. Again, I've not done this to trick people. I've made a small fortune doing the world's most basic trading. And that's the key thing. Advanced trading is actually basic trading. And you'll notice I never have indicators on my charts. Just honestly, if you're leaning on your crutches of indicators, you need to try and wean yourself off them. Number 6, yes. Number 7. Go on, shout out. Double top, spot on. Again, overextension over to here, straight into in some sort of topping pattern here, double top, neckline, should fall down to here. So if I was trading this, my target would be down here, which would have been that nice big blue, red candle here. This is completely, bonus. That you could not have foreseen. However, the move down here, easily foreseen. And look, another sort of double bottom on the way up here. What else is there? Yeah, not much. The key support across here. Number 8. Shout out. Down, yeah. Why? Head and shoulders. Who said that? Was it Julia? Spot on. Mrs. Hodkins. There we go. Shoulder, head, shoulder, neckline. What is the distance between neckline to head? That distance. So it should come down to here. Ooh, happens to coincidence. There's a lovely support here. So my high conviction, high confidence target would be this level here. And obviously, where should you be shorting this? Not there. No. You'll be shorting it at the shoulder. With head and shoulders, you should try and preempt it. So sometimes you'll be wrong. You'll short it here, and it will just carry on going up. So what? You pivot. But when you catch a head and shoulders properly, you short it at the right shoulder, and then you take profit at the high target level here. You have then a high R multiple take profit, and then anything after that is just pure fluke. So that, if you stayed in it, yeah, great. But you couldn't have foreseen that. What you can foresee is the high prop target that coincides with this support level. So yeah, nice and easy. This is slightly harder, actually. I would suggest to zoom out a little bit. What's the answer? Yep, why? Yes, Miguel, spot on. So this is an interesting one. We have a triple bottom here. Again, I'd be drawing both support levels, etc. And what you will find is that head and shoulders and triple tops, you'll normally always find little mini double tops in the head. These days, it's happening a lot, especially with crypto. Most heads of patterns will have some sort of double top, or double bottom in this case, right here. So yeah, please be up. There we go. Yeah, so triple bottom, neckline, boom. And look, happens to hit consolidation just where previous consolidation is. Beautiful. I love charting. Right, different type of method here now.
Why didn't you see a bearish rectangle there?
On the bigger chart, yeah, you could have. It's just a much clearer inverted head and shoulders. Normally with a bearish rectangle, which is a very good question, by the way, you'd see more choppiness, more noise. Here, it's a very distinct movement. Almost, yeah. Right. Up or down? Up. Why? Low test, spot on. Again, please understand the reason of a low test is it's just, like I love charts because it is literally every single participant in the market at that point and all of their feelings and actions. And at this point, the market, someone has sold something big. This is probably a big mover doing a lump sum sale or a manipulator dumping the market. And at some point around here, the market, or even the same person, goes, ha, I'm going to buy back in. And then creating this big rejection, and therefore it adds extra momentum to the upside. And yeah, so with a market like that, so it obviously depends on, so this is Bitcoin, so it's, I mean, in order to have that sort of a move on Bitcoin, that's a big chunky order. But there are times where, again, not doing it maliciously, there were times where I was playing with, DAOs, and I would do a big sell order. I'd sell like, $1.5 million of something, and I would create my own devil candle and go back in again and create my own God candle. It's like, I used to find it weird. Just, I would be doing my normal movements. I'd be selling $1 million or $2 million of something. Me moving the chart price itself, creating my own freaking candles. And then in the meantime, on my other screen, looking at the Discord channel, and then seeing all of the pretenders going, oh yeah, this has happened because blah, blah, blah. I'm like, no, it hasn't. That happened because I just did that. And you see so much bullshit, like people, trying to justify what's happened, and yeah. So that was quite illuminating for me. What's this one? Down, high test. So you can probably see how my brain was working at this point. Yeah, high test, lovely rejection on the way down. Again, the way that I use high test and low test is that you have to do them with the trend. So I do not look at stuff like this. I mean, this is a low test, but it's in the middle of the downtrend. Although it did play out nicely there, you will get absolutely wrecked trying to use high test and low tests as reversal indicators. You'll get wrecked, I promise you. I mean, look at this one here. Beautiful low test. If you went long here, you would have got absolutely steam trained. So, but again, it's just, just what I do. Again, probably same shizzle, low test, then a bigger low test. Oh, look how many low tests there are. The market wants to go up. There's low test, low test, low test, low test. And when you see that, when you see a succession of low tests in a market which is breaching all-time highs, all that is people taking profits. It's people that have been in this asset for a while go, oh my God, all-time highs, take profit, take profit. And as people are taking profit, people go, woohoo, new buying opportunity, buy back in, buy back in. And so this is when you see a succession of low tests, that's people taking profit and other people treating that as an opportunity to load up more. And then you see more low tests, more low tests, more low tests. You see that with Bitcoin a lot during bull phases. Number 13. Up. Who says down? This is a trickier one. Yeah, so, yeah, it is up. This is a pretty cheeky one, to be fair. So you draw this resistance here. There is no real support here, but what happens is, this is, in this case, it's annoying that the rest of the chart isn't already here, but it would give you a bit more context. But yeah, another low test in a rising market. This was just why did I do that? Basically the chart was coming up and up and up, down, and it is still, in the wider context, an upwards market. What about this one? Come on, shout out. Why down?
It looks like the market's shitting itself and going to crash big time.
Proper technical answer there. Yeah, I agree. Yeah. So a low test is a low test until it's not a low test. And this, as per Mark Russell's lovely term, the market is shitting itself candle. Yes, when the market has a proper wobble like this is not a low test. This is a fundamental shift in whatever's happening here. And you always have that big old devil candle going all the way down. This is just a natural 50% pullback, because anything overextended will 50% pullback, nearly always. But whenever you have a sort of a devastation candle like this, you'll nearly always see another bite at the cherry. And I've made a lot of money banking on another bite of the cherry, nearly always. This low is nearly always, I would say 85 to 90% always taken out. I can't say always. 85 to 90% probability of being taken out. And in this case, that happens. So if I see this, I will short the living daylights out of that market right there. And then I'll be taking profit, or parts of the profit, when we get to this level here, knowing that this is going to be taken out. So this is a form of crash trading. The way you trade in a crash is completely different to normal market behavior. So yeah, nice bite at the cherry, boom, hit target. What happens after that? You have to treat the market completely different. In this case, I wouldn't have got that, but yeah.
Would you try to fade it?
I'd sit tight. Same shizzle, right? Big old devastation candle. Now, so this took a little bit longer. This is actually, a prime example of this was 2015. So you remember the Black Monday crash? That was a big win for me, Black Monday, 24th of August, where all the markets did something like this. And we made a small, tidy fortune during that day in that candle. But what happened is we had an aggressive pullback, very similar to this. And I then put in some big trades, shorting it again. But what happened was it looked like egg on my face for about a month. And it was horrendous because I had a pretty big short position on. And the market just kept going up and up and up. And everyone's like, Siam, you sure this is coming back down? I was like, yes, bite at the cherry, bite at the cherry. And I was banking on the market coming back to take out that, not this particular low, but the low of the S&P 500 at the time. And it did happen, but it took an extra freaking month. So, you know, for a good 3 weeks, I was like logging into FXCM going, 800 grand down. And doing what I think Jaeger did, you know, just not logging in sometimes, just going, yeah, I know I'm hurting, I'm waiting. Yeah, and so obviously this is the 4-hour chart, but this is what the S&P 500 looked like for the best part of a month. And it came round to take out that low, but it just took freaking forever. And that was a very stressful period. I was depressed but yeah, look, low taken out, boom time. Any answers? Yep, down. And also double top. Double top, market devastation, natural 50% pullback at least. Market should take out that low, which it did. And all of this is a nice bonus. You can't really bank on that. A lot of the time it will more than offset this, but you shouldn't rely on that. There have been times where I've really gone to try and grab the bull by its balls and try to ride it a lot further down. But what happens is the market will just simply wick it and then bugger off. And I've been left holding the balls of an angry bull. So, not good. 17, this is a tricky one. This is the one I actually feel guilty putting in. And there's one specific, it is pretty 50-50, but I have one little explanation which tips it over one side. Up or down? Down. Oh, whoa, you all said down. Why down? But that's a symmetrical compression, though. It's in a downtrend. Ah, you guys know your shit. You must have a good teacher. But that's not actually the reason why. I would still say it's very close 50-50. Even though it's in a bit of a downtrend, yes, I would only give it an extra 5% probability to the downside. So it's 55% down, 45% up. The one little thing that tips this to more of a 60-65% to the downside. Support line, getting there, Cam. There we go, got it. Remember the skipping stone. Support and resistance is like winging that little pebble across the water. The more times that pebble connects with the water, it loses kinetic energy to the point it goes skip, 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 skip. It loses so much kinetic energy, it just plops through the water. The markets are exactly like that. So when you're looking at these two support and resistance levels, which one has more hits of the water? The bottom one. This one has a clear 1, 2, 3, 4 sort of touch points. This one, okay, there's a lot up here, but what's more recent is this part here. So this compression really starts from here, and then down here, but there's only real 2 sort of jumps here. And with support and resistance, the gap between hits is crucial. When you have a big gap before the next hit, that actually is a very strong resistance or support level. So here, this is actually a very strong time to short it, because it would have been a long time since it hit. Whereas here, it's more consistent. Therefore, it's likely to go to the downside. However, this next picture then destroys what I just said, because it's got lots of touch points, and then it just continues breaking through. This is why I tend to just stay away from symmetrical compressions. It's just too 50-50, really. The only way to win with 50-50 outcome trades is to make sure that your risk-reward is, as in your R multiple is a bit higher than normal. 18, up or down? Why? Yes, good. Migs, you know your stuff. I'm impressed, thank you. Double top, nice and easy. And what happens here? Neckline. Bit of a Kobo. Here, that double bottom would have really confused some of you, including myself. I would actually have a second look at that and go, wait a minute. We've got a big double top and then a mini double bottom. In which case, I would have actually done both. I would have straddled the trade, and because this is a smaller bottom than this bigger bottom, I would have taken a short-term long, aiming for roughly this pullback here. That's roughly 50%, and then continue with the short. So I would have gone short there, and then I would have probably mind you, I would have drawn my 50% on that line, so I may have missed my exit. Who knows? 19. What is that? Other than MIGs. Up? Why up? Sorry? Break of resistance. Yes, spot on. So we have downwards trend. You draw that downwards trend line, and then boom, a definitive expansion out of that trend. You're no doubt probably going to see more of a pullback. This looks like it was caught mid-pullback. I would expect at least another bite, this level here, before moving back up. In which case, it didn't do that. It just carried on going straight up, which is hey-ho. And then if you're riding this up, what would you do? You just extend this base support level all the way up and then you stay in it until it breaches it. 20. Now what? Down. Kobo. Yes. Nice support level. Going up. A hard breach. This is a definite screw you upwards trend. I'm out. Creating a nice double top. It's then doing a Kobo. Remember, if you were to draw this line here and extend it, it's busted down here, pulled back to kiss it off before buggering off. And that was like, whoa, some sort of weird, someone was doing some crazy buying and selling. Sometimes it's down to, okay, some big boys are playing, I'm just going to sit tight and wait. But yeah. And this is the only non-Bitcoin chart. Down. Why down? It's not time. And it's not ohm. It's not time or ohm. Broken base support. Yeah. Yeah, the reason, this is actually HEC. This is Hector DAO. And I just wanted to put it there that if you're still in a DAO, you're most likely going to lose more money. If you're in a node, one of these fancy new nodes that everyone's running into, you're most likely going to lose more money because nodes will fall under the same death of rebasing DAOs. They haven't learnt their lesson. And so when you start entering any sort of fancy new market like this, and every single day, I shit you not, I probably have about 10 new direct messages per day now. And most of them are like, hey, Siam, I found this new thing. It's blah, blah, blah. I'm like, oh, my God. I'm getting pitched every freaking day. Most will end like this. And when you're in a terminal decline like this, you just got to get out. So great if you can ride them up, but just draw base support. Once base support's been breached, get the hell out. And don't get back in until base resistance has been breached. And in this case, yeah, it's going to flatline.